Hi, I'm Scott with the Modest Millionaire, and today we're going to be talking about some scary stuff, stagflation, all part of our Halloween edition of the Modest Millionaire. So let's talk about stagflation. As a quick economic overview, we see different economic conditions based on inflation and unemployment and the relationship between those two. And when inflation's high and unemployment's high, we have this condition called stagflation. Then we have inflation, right? When inflation's high, but unemployment is decreasing. And normally in that trend, we have some economic growth. Conditions are improving potentially. And then we have deflationary environments where inflation's decreasing and unemployment's increasing. And again, in those conditions, maybe some slowing economic growth. Today, we're going to be talking about stagflation and what it means for the overall economy. So I like to look at a case study. Again, we like historical data and economic trends here. So if we look back in the 1970s, a significant case of stagflation, and we see from 1964 to 1980, inflation increased significantly, went from 1.3% to 13.5%. So we had inflation increasing significantly. We also saw an increase in unemployment going from 5% to 7.2%. So again, we had inflation increasing, unemployment increasing. What did we have? We had stagflation. And let's look at what that did for the economy. So again, this is just a chart of the S&P 500 from 1960 to 1984. And we see from that period, from again, the late 1960s to, mid 1970s, we saw a significant decrease in the S&P 500. Again, really being driven by that stagflation. Scary times. And in fact, if we look at that trend, if we were to just hold our money for a 13-year period of time or 11-year period of time, we didn't grow at all. It was a lost, 11 years there. So again, scary times, that stagflation, and really what it meant in the 1970s. Now let's talk about kind of today. So if we look at unemployment, we see unemployment, has increased. Since 2023, we've definitely seen an increase in unemployment, and we keep hearing rumors that it's going to continue to go up. And so then we look at, so that was unemployment. Now let's talk about inflation. This is a chart of inflation over the last 20 years, and we see that dotted line there. The average inflation's been about 2.58% over the last 20 years. The September numbers were just released last week, again in late October, and we were at a 3% inflation rate. So slightly above that 20-year high, but that 20-year average had some anomalies. We had some big increases in things there. And we know that the Federal Reserve, their target rate is 2%. So right now, as the September numbers that were published in October, we are higher than the 20-year average. We're higher than the Federal Reserve, goal. But let's look at a little more detail of that. So just as a one-year trend, we see in September 2024, we were at about 2.4% inflation. And again, the numbers just released 3% for September 2025. But an increase, right? Definitely. And if we look at that trend a little closer, as of April 2025, Liberation Day, we actually saw inflation coming down, and we were doing a pretty good job. And then Liberation Day came with tariffs, and what have we seen since then? We've seen definitely an upward trend since April. So what I would propose is, again, we're seeing inflation increasing without a doubt. We're seeing unemployment increasing without a doubt. And, that gives rise to potentially some risks for stagflation. So what does that all mean? Does this mean we're currently experiencing stagflation? I'd say no, but there are definitely risks out there. And we saw in the 1970s when we had stagflation, it wasn't great for the economy and it wasn't great for the stock market. Does this mean that the S&P is going to crash tomorrow? No, right? No, we're continuing on an upward trend, but we do see some risks. Do we believe that it's prudent to have an exit strategy where you rely on data and not emotional feelings to adjust your strategy? Absolutely yes. So what we like to talk about is, what's your exit signal? We know the S&P 500 just hit all-time highs. Things are continuing to go up, but what's your exit strategy, especially if we see stagflation? We want to make certain you're managing your investments, managing risk as well. So that's what we do at GNZ Financial. And again, let's connect. There are a couple different ways for us to connect. Please subscribe and follow us. Please check out our website. And also, for the Modest Millionaire family, we offer a complimentary 15-minute mini consultation to talk about your unique situation and kind of your path towards financial freedom. Take care, talk soon, and as always, stay curious and dream big dreams.